Hello traders, and welcome to NOFT's Weekly Market Compass, where we help you navigate the week ahead. Our Weekly Market Compass is brought to you by our head trader Troy, who in between assisting traders in taking the next step in their careers, provides weekly and daily guidance in our live trading room every single day. Before we get into this week's guidance, we need to remind you that trading does carry significant risk, and all information in this video is just provided for educational purposes only and is not an offer or recommendation to trade future stocks, options, or Forex. From everyone here at NOFT, good hunting out there and happy trading. Here's Troy.
Okay, I'm looking at forexfactory.com, at their calendar. Obviously, it's a free site, it has great resources for calendar type stuff and news. You see here Monday, March 19th, that's today, we start the G20 meetings. Now, the G20 meetings normally are pretty low value, but because of all the tariff stuff going on, these could certainly turn out to be very, very pivotal, nasty press release type stuff that could definitely affect the market. So that's going on all day today. Otherwise, there's really not much going on specifically. The Aussie dollar has the monetary policy meeting minutes. That's always a big item, 8:30 this evening, but pretty tame Monday. Other than the G20, again, it's sort of a you just don't know what to expect because of the Trump tariff situation. There could really be some nasty stuff that comes out of the G20. Looking forward through the rest of the week, let's go ahead and look at Tuesday, March 20th. Tuesday, as you can see, there's one red item, CPI for the British UK. That will be, if you're going to be up at 5:30 in the morning, just be careful. There will be a little increased volatility there. Again, day 2 of the G20 meetings. So we're sort of going to be on edge the first 2 days of the week, sort of just making sure you're careful because news could come out at any minute related to I believe it'll be very related to the tariff discussion. On Wednesday, Wednesday is the big day. Obviously, there's some hourly earnings, average earnings for the UK, but the real numbers that we are interested in the U.S. is existing home sales, crude oil inventories, and wow, at 2 o'clock we got the FOMC economic projections, the FOMC statement, and the federal funds rate, all gigantically red items. Everything will be 5 minutes till 2. Everybody goes on hold waiting for the numbers to come out. 2:30 there will be the press conference. So big day on Wednesday. I'm going to have my trading long done by noon on Wednesday and probably step aside. Could be really nasty. Do expect the Federal Reserve to raise rates by a quarter point, but expectations have been known to be wrong. 8:30 we have 2 red items, employment change and unemployment rate for the 6A. That's kind of rounds up Wednesday. Wednesday is a very, very busy day from a news perspective. Thursday sort of slows down a little bit. Really gets cranked up in the UK early in the morning. We've got some 5:30 a.m. numbers, retail sales. Again, monetary statement, official bank rate. Anytime you have interest rates happening, you're going to have big movement around the bonds, around the local stock market, etc., or especially around the currency. As we move through Thursday, unemployment claims for the U.S., but those have become less and less interesting as we approach that magic 200,000 area, but they're expecting 225. I don't expect it to, I actually think it'll be a little bit less than that. Then jump to Friday. Friday, again, quiet, relatively quiet day for the U.S. We do have core durable goods and durable good orders. Remember that this is an interesting number for the U.S. because it sort of tells us where manufacturing is and what those durable goods can comprise of and how they're doing. For the CAD, wow, we got like 6 different things coming out here on the CAD at 8:30, the Canadian dollar. CPI, core retail sales, common CPI, medium CPI, retail sales, trimmed CPI, core CPI. I get cracked up whenever you have 6 different numbers. They're all basically the same number, except you have a core and then have a regular. You've heard me talk about that before. The core numbers are garbage. They exclude certain ones for no other reasons than some economists somewhere decided to exclude it. It's retarded. You want to look at the real number is the full retail sales, regardless of what they want to subtract out due to volatility. That's complete garbage. Why? Because it all affects us and our pockets. And if it affects us and our pockets, it needs to be in the number. So I think the core numbers are complete BS. So I don't pay any attention to the core numbers. I look at the main numbers. So not looking at core retail sales. I'm looking at retail sales. And you'll see that there's a ton of core numbers that get released, and it's ridiculous because it still affects the economy even in the same ways. Yet for some reason they want to exclude some of that information. I just don't understand that. It's ridiculous. And that wraps up Friday. Wow, that was exciting. Okay, so we'll recap very quickly. Let's look at today. We have just the G20 meetings, and then late in the day we have the Aussie. So let's look at some charts. All right, so we're going to jump over to the ES. ES, maximize this. ES is coming right down to a very pivotal point right here. We've got a long-term trend line here. We also have another trend line from up top here. They're all converging right at that point. Very interesting point here. I would say long 27.35 quarter. Would not be interested in shorting until it reached back up into the 27.67 area. Not a bad looking chart. Finally, the ES is actually looking interesting. The NQ has broke the flag, and it may be getting ready to set up for another flag. Okay, it would be very, very common. You like to see stair-step flags, and so you see this pennant shape. We could definitely be in a place to have a pennant shape here, and that would be another. I'll try to draw it, even though I'm not a very good artist, but you'd have something like this, and this would be the next little flag. Okay, so that could certainly be a potential pattern setup, setting itself up. Still very, very early for that, but still. That case, I'm not interested in trading the NQ here at all, especially when we're at this middle little volume bubble here. You can see that right there. And that's going to be a happy place. This volume, high volume in the past, means that the market likes to be there. And I can see it shopping around for a while due to the high volume node there. Jumping over to, let's see, crude oil. We are on the main contract now. I kind of like this pattern. I think that we are going to, this is screaming sideways action, but sideways is not necessarily bad for the way we trade. I definitely think we could retrace back down into the 61 area from the 62.50-ish area that we have been at. I would definitely be looking for a short at that high, 52.59. Long, I'd have to be a little more patient and look for 61.21 for a low, for a long and a low in the CL. Gold has finally broken out of this little wedge pattern here. I think we're definitely going to sink down to the 1305 level. I'd be looking for a potential long there. Just really nothing going on other than the tariff story to add any kind of geopolitical risk to the situation. That I don't have much to say about gold. The ZN, the notes, continue this sideways to down. They're going to be very sideways moving into the Federal Reserve meeting on Wednesday. I can't see them really breaking it out in one direction or another. There's always a small pocket of risk that the Fed may not raise rates or may raise more than expected of the quarter point. And that is going to keep this in a sideways action, I think, for the rest of the week, or at least until Wednesday. After Wednesday, once the number comes out, I do think we'll see another leg down. Just for fun, look at Bitcoin. Man, oh man, if this isn't an M pattern, I don't know what an M pattern looks like. That is an M pattern, and that, of course, M stands for murder. And it is drifting down around 83.15 at the moment. I think that it's going to be a look out below scenario on Bitcoin. There's a lot of people have been talking about Bitcoin over the weekend. I saw all kinds of stuff. It's amazing how much hype you can see about Bitcoin. But I think the president or one of the CEO of the Chicago Merc came out and said that Bitcoin was here to stay. Yeah. What happens when it breaks this 6,000? When it breaks that puppy, there's going to be a lot of people bailing out. Also, just as a fun thing, I spent some time looking into, I have 2 computers I'm, quote, retiring. And those computers, I thought, well, you know what? Why don't I just put those in the basement and let those puppies crank out Bitcoin? And so I was like, hey, I better look into this. So I looked into what it takes to actually mine Bitcoin. And it is not a simple process like it used to be. It used to be you could just, had an old computer, you could just put it to work. That's just not the case anymore. It's an expensive endeavor. And it's very, they've run prices to a place where they're basically very, very narrow margins on them, on mining Bitcoin. You really have to spend some money to be able to do it. And have low power consumption, all kinds of other scenario things that come into play. But as those prices continue to go up, there's going to be less and less mining going on. I think there's going to be less interest. And again, 6,000 is obviously the number to watch. If they can break that, there's just nothing below it. It's like, woohoo! You drop it when you're a kid, and you drop the rock into the well. Or you drop the rock off the cliff and you're waiting to hear it hit the bottom. I think that would be the situation in Bitcoin. Anyway, so it's always fun to look at. Never want to trade that puppy because it's still extraordinarily thin. I think it still does around 2,000 to 3,000 contracts per day. Okay, per day. That's super, super, super thin. We want to stay away from that.